Welcome to Bloomberg Technology. I'm Emily Chang in San Francisco. Markets ending the day in positive territory as we wait for Republicans to unveil the next round of their stimulus plan. This will likely involve reducing unemployment benefits significantly, which means the average American would get just $200 a week as opposed to $600 a week. There you are, seeing the senators continuing to debate on the Senate floor. This as jobless claims and cases of COVID-19 continue to rise around the world. 2 Major League Baseball games now canceled tonight because players tested positive. Meantime, some good news. Moderna is kicking off a late-stage trial of its vaccine candidate, which will involve tens of thousands of people. Joining us now to break down the day that was, Bloomberg's Abigail Doolittle, who's been following all of the back and forth in the markets today. And Moderna shares, Abigail, ending the day slightly down despite this good news about their vaccine progress. What stood out to you today?
You know, well, with the stock up more than 800% on the year, perhaps a little bit coming off. And I think that might have been the after hours view, actually. On the day, I think it was up about 9% on the fact that Moderna is close to $1 billion in U.S. funding. Now, relative to stocks, you got it. It was topsy-turvy. We did end higher after 2 down days. But at one point, it was a little bit questionable as stocks were up just slightly. But at the end of the day, the NASDAQ 100 really pulling out a nice gain, up 1.8%. The chips index, take a look at that, up 3.2%. Hopes that some of the Intel's competitors might be able to produce those next generation chips. They're taking a breakout. The big story, though, Emily, not so related to tech, but gold. Gold hitting a record high, closing at a record high. All of this is the Bloomberg Dollar Index down about 1%, giving a bit of a tailwind to these risk assets. And after hours, Emily, we do have F5 Networks, the networking company, reporting. Earlier, just not so long ago, the stock had been higher when the results initially came out. But as you can see, now down 2.7%. And this really has to do perhaps with the fact that investors wanted a little bit more. They did beat both top and bottom line estimates, at least adjusted estimates. The fourth quarter adjusted EPS guide is better, too. So we'll have to wait to see what comes out of the call, what nuance it was that investors wanted more. And I should mention that really software gains drove those results for their fiscal third quarter.
Speaking of earnings, Abigail, we've got some big ones coming out. First, we had that big tech antitrust hearing coming up on Wednesday, which now means that 4 of the biggest tech companies, Apple, Amazon, Google, and Facebook, will all be reporting their results on Thursday. What are you looking ahead to?
The pressure is on. It's really pretty incredible. That is about 40% of the NASDAQ 100 reporting on one day. And what we know so far, Emily, is if these companies do not put up a perfect quarter because they are priced to perfection, because they have gone so far so fast, the stocks will fall. That New York FANG index, as you can see, out of the March lows, up 71%. That's really pretty incredible. Now, of course, that includes Tesla and some other companies, but Apple, Amazon, Facebook, Alphabet, you can make the case that all of these stocks are priced to perfection. Relative to Apple, in fact, it is definitely what you would call peak valuation as opposed to trough valuation. Its multiples are high relative to competitors. Its multiples are high relative to its own history. So we are going to have to see these companies put up perfection, both relative to the quarter that was and the guidance that will be. It's going to be interesting to see whether or not that happens. Stay tuned. Fasten your seatbelt, Emily.
All right. Well, my seatbelt is fastened. We are going to be all over this week. Abigail, thanks so much for breaking it all down. I want to get back to those Senate negotiations on the Republican part of the stimulus plan. I want to bring in our congressional reporter, Emily Wilkins, who's been following the very latest. We are watching Senate Republicans debating right now on the Senate floor. Emily, what's the latest in the negotiations?
Well, we are getting things underway. Republicans are expected to unveil their bill this afternoon for the stimulus. Remember, Democrats passed a $3.5 trillion bill back in May, and they've been waiting for Republicans so they can begin to negotiate. Now we're going to see just what's in the Republicans' opening bid. A few things we already know. $100 billion for schools, some of them so they can reopen. Another round of stimulus checks for some Americans, and expanding of virus testing are all things that we're going to be expecting to see in this proposal out later today.
All right, and they have officially released the first part of their pandemic relief plan. We're working on getting those details. Talk to us about what the big sticking points have been. Obviously, we know that the main issue here is that unemployment in their plan is going to be dropping significantly. Right.
So right now, on top of the unemployment that people are getting from states, the federal government is giving an additional $600. That runs out very soon. And then the proposal is to give $200 in supplemental. But even that is temporary. That would wind up under the Republicans' plan, setting up to give people 70% of their previous earnings. That's something that's actually going to take some time for the state and federal government to figure out just how to make happen. But we are expecting to see that drop being proposed by Republicans. Democrats want to keep the full $600 extra supplemental to unemployment insurance. So that's something that we're going to wind up seeing being negotiated on from both sides.
Meantime, Senate Democratic leader Chuck Schumer has already called the Republican stimulus package totally inadequate, too little, too late. So how do you expect this to be received? And then where does the debate go from there? We're currently watching Senator Susan Collins now on the Senate floor.
You know, it's really no surprise that Senator Schumer says that this bill doesn't go far enough. It won't be a surprise when Speaker Nancy Pelosi says this bill doesn't go far enough. They're now in negotiations, and so they're going to continue to paint the Republican bill as not doing enough to apply pressure and try and push them towards closer and closer towards the Democratic bill, which has more spending, more funding in more areas. And so this is just what we're expecting to see from negotiations. From the timeline that we've heard from lawmakers, we are expecting to hopefully have a bill passed at some point in early August.
And again, we're continuing to go through the first part of the pandemic relief plan. Of course, it's a very dense text, so still waiting on the highlights, Emily. What are you expecting on the president's side in terms of his position on this?
I think President Trump understands that a lot of the country is still hurting due to the coronavirus. We've seen a lot of states try to reopen, get their economies restarted, something that Trump himself championed. And then we saw all those states turn back around and say, hey, we're seeing a booming number of cases. We can't reopen yet. So I think because we can't see the economy restart the way that a lot of people were hoping, the need for this stimulus has become all the more clear.
All right. Bloomberg's Emily Wilkins continuing to cover those Senate negotiations for us. Emily, thanks so much. We'll be continuing to listen in here. Meantime, I want to talk a little bit about what this means for startups and what it could mean for Silicon Valley. We are joined now by Russell Hancock, the president and CEO of joint venture Silicon Valley. Russell, thank you so much for joining us. So obviously, we're still waiting for the details on the Republicans' side of this relief plan. Democrats have already said they're not going to be happy with it. But what's your reaction to what we've seen so far, specifically this idea that unemployment will drop significantly by 2/3?
It's a Main Street issue. I want to be very clear about that. America's hurting. There are a lot of people out of work, and they need these kinds of enhancements. Support from not only federal government but state government. The Democrats, Republicans, they'll figure it out. There will be the back and forth that you expect when they make the sausage in Washington, but it will come down. But it's a separate question about the tech sector and how that will be affected. And the fact is that tech is actually weathering the crisis better than most. And so this, the pain that's being addressed isn't necessarily in the tech sector, but it's in Main Street. And that's why this is so important for the country, but not necessarily in the same way that it is for Silicon Valley.
That said, Russell, so much of tech is startups. These are fledgling businesses that could have a lot of potential, but obviously need funding to get further down that path. We spoke to AOL co-founder Steve Case last week, who argued that the next round of stimulus should be going to startups that are going to create more jobs. But of course, it's hard to prove that these companies will create jobs when it's so far into the future. How much of the stimulus funding have startups and Silicon Valley actually received?
I can't quote you numbers, but it's actually smaller amounts than people would think. The truth is, in Silicon Valley, the startup culture, the startup environment has always lived in its own specialized ecosystem with an arm's length relationship with Washington and with Wall Street, and of course, that umbilical cord tethered to the venture capital community. And so this continues to be a closed ecosystem, even during the pandemic. We're seeing layoffs in the startup environment, but not the kinds of numbers that you've seen in other sectors. So for the most part, your startups continue to be fairly robust.
Meantime, we're continuing to watch there Senator Marco Rubio making his arguments on the Senate floor as the GOP continues to debate their version of this stimulus package. We've received the first part of this plan. We're continuing to go through it. It's a very dense plan, so we are working to pull out the highlights. Russell, how many jobs have been lost in Silicon Valley? How many startups have been forced to close their doors? Do you have any numbers on that?
We only have preliminary numbers, and we can't be precise because they're constantly moving targets. But the fact is, we have to say it up front, the startup community has not been hurt in the same way that other sectors, especially the service sectors, the food, the retail, those sectors have been hurt in a way that's been devastating. It's not the case with the startup community. They're drawing on deep pockets of funds that have come from venture capital in the millions and millions of dollars. We have about 137 companies in Silicon Valley that just achieved their A round of funding. Of those, about 50% had to have some layoffs, but only 7 of those startup companies have gone belly up, laid off 100% of their workforce. So as I say, this sector, vital sector, it continues to be more robust than the others that have been really hammered by the pandemic.
Russell, when this relief package, when you see the details of it, what exactly are you going to be looking for? What could have a meaningful impact?
I think what's especially important is the unemployment benefit, the payroll, the Paycheck Protection Program for small business. That has been absolutely key. And the difficulty for small business is that it hasn't been reliable. The red tape, for example, for figuring out the loan forgiveness has been too difficult to negotiate. There hasn't been the assurance that it would continue, and so you can't undertake any of the long-term planning that you would need. So those are the sorts of things that small business especially is looking for in this second round of stimulus.
All right, Russell Hancock joining us, the CEO of joint venture Silicon Valley, as Senator Mitt Romney now taking the floor as the GOP continues to debate their version of the new stimulus package. Russell, thank you so much for joining us. We're going to continue to follow those negotiations. Coming up, Google is now extending their work from home policies until next summer of 2021. We're going to talk about what this means for big tech and whether other companies will follow suit. That's next. This is Bloomberg. Google has announced it'll allow employees to work from home until July 2021. Here to discuss the move are Garrett DeVink, who covers Google and Alphabet for us. So, Garrett, obviously this is hugely significant. The timelines have continued to get pushed out. What is Google's reasoning here?
Yeah, I mean, I think a couple things are happening here. So in the memo that Google CEO Sundar Pichai sent to his employees, he said, we're doing this to allow you to kind of have essentially make plans for the year. And so I think what probably happened behind the scenes is a lot of Googlers in the U.S. seeing that, the school year was about to begin. They were trying to make plans, and they didn't want to have to essentially get pulled back to their offices in the Bay Area mid-year through the school year, which Google's original time frame was January 2021 for getting people back into the office. And so I think regardless of whether it becomes safe to return to the office, before then, Google is essentially saying, look, just so that we can all make plans for the year, there will be no requirement until next summer. And, other tech companies, Facebook and Twitter, have said, that they want to come back to the office. But if people want to work from home indefinitely, they can do so as well. Google hasn't kind of gone that far, and that's probably partly why they've extended their time frame out so far.
Right. Do you have any insight into why Google hasn't gone that far?
Yeah, I think that's a great question. The other companies would obviously argue that they also have very strong corporate cultures, but Google is probably talks and thinks a lot more about that. And I think at the end of the day, they see themselves as an organization. I think they just haven't been able to kind of stomach the idea of, making that call. And I don't think that they necessarily need to. They're not necessarily under a ton of pressure to sort of do that indefinitely. But yeah, I'm also curious to see if the other tech companies say, that they will also extend, their office openings for those, who don't want to work indefinitely, following the timeline that Google has kind of talked about now.
Meantime, it's obviously a huge week for Google and most of the big tech companies with this antitrust hearing coming up on Wednesday, and then all of them reporting earnings the following day. Do you have any insight on the arguments that Google, Sundar Pichai, the CEO of Alphabet, plans to make?
Yeah, I think, we know that the companies are going to really try to sort of just obfuscate whatever kind of tough questions they get asked. I'm sure, we can expect to see a lot of, I'll get back to you, Mr. Congressman, from the CEOs. And then when those reports come in, maybe not a lot of substance. But I think in terms of this antitrust hearing, the politicians really, really want to, focus on the antitrust question. And I'm a little concerned that might not happen because, just last week we were seeing from some of the Republican members of that committee that they wanted to talk about bias and bring that into the antitrust question, which, as we've seen in previous hearings, once you start talking about misinformation and whether YouTube or Facebook are, preferencing liberal voices over conservative ones, then that conversation really breaks down and the CEOs can kind of step back and not really have to answer anything substantive. So we're hoping that it's going to be a little bit more focused, but we'll have to see.
All right, Bloomberg's Garrett DeVink, you'll be all over it, as will we. Thank you so much for that update. Okay, coming up, Moderna moving to phase 3 of human clinical trials for its COVID-19 vaccine candidate. This is a huge development. We're going to hear from the CEO coming up. This is Bloomberg. Big day for COVID-19 vaccine news. Just minutes ago, Pfizer and BioNTech said it'll start its phase 2 study on their vaccine candidate. Their aim is to have 1.3 billion doses by the end of next year. Pfizer up after hours and BioNTech there. Meantime, this on the same day that Moderna is moving to phase 3 of its human trials. Moderna CEO Stéphane Bancel spoke to Bloomberg Television earlier today.
What we anticipate is you could have data, in the November timeframe. It is possible that we could have data in October. That is not the base plan. That is the best plan. And then when this happens, I think based on the data, the FDA could decide to give us emergency approval. And that will make the vaccine available in the US for people at our highest risk, the elderly, maybe healthcare workers, while the FDA reviews the file for approval for the general population. And so what we have been doing at Moderna, we raised $1.3 billion of capital in May to invest in raw materials, in equipment, hiring new team members and training them. And as we speak, we are making as many vaccines as we can with the goal of making 500 million doses maybe up to 1 billion doses in 2021.
We just talk about how easy it's going to be to attract the necessary sort of demographics within the test. How easy is it going to be to attract those key demographics, the most vulnerable demographics, particularly seniors? Are you struggling in that area? Are people coming forward and wanting to take part in the test?
So it's a bit too early to know about the phase 3, given we just started this morning. But what I can tell you is over the last weeks, we've had thousands and thousands of people across the US asking us to come into the study. We've had people into the diverse groups, both elderly, African American, Latinos, and so on, which is very important for us. We want to make sure that the study has the right representation from the core demographics in the US that are the highest risk.
This might be a silly question, but bear with me here. Is your vaccine an antibody vaccine? Is it a T cell? Like, how is it going to work as compared with some of the other vaccines out there?
Is a vaccine that is able to activate both B cell and T cells. So it's a bit complicated. The B cells provide, if you want, antibody, neutralizing antibody. And the T cells are used for memory. And what we've shown in the human study that was published in the New England Journal of Medicine 2 weeks ago is that we had a very high titer of neutralizing antibody, around 4 times more than people that are with convalescent sera, people that have been naturally infected. And we've also shown some CD4 T cells, which is a very good sign for the future efficacy of a vaccine. But at the end of the day, like everybody else, every other company, we have to run the phase 3 to really know the full efficacy of a vaccine.
We are, though, seeing other vaccines producing a T-cell response. Is this going to be one of the key differentiators, you think, as to whether or not we get a antibody and a cellular response? Is that going to be one of the kind of areas that we are going to, as people that are going to receive it, need to differentiate?
Yeah, I think people are very actively looking into those differentiation now because we don't have any more data. So everybody is trying, from industry, the scientific community, the regulators, to try to map out what do we know today from the phase 1 study for those that have run a phase 1 and published the data, and there are only a few companies, through the preclinical animal work, just to try to guess. But the real test that everybody is going to have to go through is to run for the US a 30,000 participant phase 3 study, 50% placebo control, every other person getting the vaccine, every other person getting the placebo, and measuring the number of events and to really know, like this, the true efficacy of a vaccine. People are trying to guess now, but the phase 3 is going to be the real test for everybody.
Stéphane Bancel there, CEO of Moderna. Coming up, more of Bloomberg Technology. We'll be talking antitrust and earnings after this quick break. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang. The biggest U.S. technology companies have gone on a buying spree this year, waving off intense scrutiny from antitrust critics. The number of acquisitions by the 5 largest companies, Amazon, Apple, Google, and Microsoft, along with Facebook, came at the fastest pace through June since 2015. To preview the big tech antitrust hearing coming up this week, as well as the companies reporting their latest results, we've got Dan Flax of Neuberger Berman with us. Dan, always good to have you here on the show. So this antitrust hearing was supposed to have happened today. It's now postponed until Wednesday. And then you've got all 4 companies, Apple, Google, Amazon, and Apple, reporting earnings the following day. Let's start with the hearing. How are you expecting it to play out?
Emily, I think, firstly, it's great to be with you as always, but I think what's important with these hearings is that these companies really need to provide a level of transparency around their businesses. They obviously are key building blocks of the digital economy. I think what's important is that others are able to build on top of them. But what I'm looking for is for these CEOs to really elaborate a little bit more on their business models. So in the case of Google or Alphabet, how they use customer data. Amazon, of course, which they've talked about, but just in terms of their marketplace. So more transparency, more explanation of how they use data. But from an investment standpoint, what's key is that these companies continue to innovate and really experiment, build, and allow their users and the people who build on top of their platform to derive value.
How concerned should investors be, though, about regulatory risk?
I think it's a risk, Emily, and I think it's a concern that's been with us for a while, and it will be with us for the foreseeable future. Part of it is because as these companies go into newer parts of the economy, and other industries are by definition always going to be impacted by what these companies and their ecosystems do. Regulators, rightly in my view, are going to scrutinize more and more of that. But if we step back and think about the broader spectrum, you've got the healthcare industry, you've got utilities, you've got a wide variety of industries that are subject to regulation. But if companies are able to deliver value to their customers and their constituents, really the broader society, then I think there is room for them to create shareholder value as part of that.
Now, Facebook moved its earnings to Thursday because of this hearing. So you've got all four of these companies reporting on Thursday. Big week for everyone, including us. What are you going to be watching, especially as you've got, for example, Google and Facebook, which are reporting earnings during a massive contraction in the ad industry, and Facebook specifically dealing with a large-scale boycott among its advertisers?
I think we obviously have the issue of the recession and the pandemic that is impacting all of these companies, and that is continuing to be a near-term risk. I think what the market is looking at is really the bottoming of growth estimates and really looking out 1 to 2 years and seeing a reacceleration, which has helped to drive share price strength in the last couple of months. Specifically for Google and Facebook, there is, of course, going to be scrutiny around how their ad business is performing. But in the case of Google, I think if we look at the different parts of that company, you have the core search business, which is obviously seeing some pressure. But I think the YouTube asset is healthy, and that will see improved growth over the next 1 to 2 years. And then I think there's the Google Cloud platform, and that's really a business that's targeting enterprise customers, and we think that's an underappreciated part of the story. So even with the recession, if we look at Google, there's some very interesting parts to it. I think more broadly, Amazon, obviously, they're doing well as a result of the growth in e-commerce, and Apple, which is being impacted by, of course, the demand slowdown, is continuing to broaden its drivers. Beyond the iPhone, you have services and wearables. So a lot going on.
Let's talk a little bit about Amazon. Obviously, we know that Amazon demand for e-commerce has been off the charts. When it comes to antitrust issues, Jeff Bezos is the only one, I believe, that we haven't seen testify on Capitol Hill. We've seen all of the three other CEOs appear before Congress. How do you think that potentially changes the story for Amazon?
I think the Amazon narrative, Emily, is going to continue to be one where they're really trying to bring a lot of value to their customers with Prime. Obviously, there's the marketplace, which we touched on before, which enables sellers and really a much broader group of men and women, small businesses around the world to participate in their ecosystem. So I think even though that's going to be Jeff Bezos' first time in front of Congress, I don't think it meaningfully changes the narrative. Of course, we have the Amazon Web Services platform, which has really become instrumental when we talk to customers, enterprise buyers. Amazon Web Services has become a key part of their infrastructure. So there's a lot that remains attractive over the next 2 to 3 years with Amazon, but they, of course, are going to have to respond to what the government is looking for. And I think in general, where they're able to bring more transparency, that will benefit the constituents on their platform and the company, and as well as the shareholders, again, assuming they can execute on all of that.
Now, we do know that Apple CEO Tim Cook was the last of the four to agree to testify, and reportedly He didn't believe that Apple should be considered in the same category as these other companies, didn't pose the same sort of anti-competitiveness issues. Roger McNamee, who's on our show frequently, has made the same suggestion that Apple, though it might have some anti-competitive behavior, certainly isn't in the same league when it comes to antitrust issues as Google, Facebook, and Amazon. What do you think about that?
I think there's some important differences, Emily, that are worth noting with Apple. The first is that their business model relative to Google and Facebook isn't predicated on ad growth. And so that has key implications in terms of how data is being used. And so that's a piece of it. Another piece is when you look at Apple's influence, they're actually a relatively small percentage of the units in say, the smartphone market. I think their App Store is an important part of their story, but if you look at the App Store, the majority of the apps are free. And so I think there are some important differences. I think what's a little bit also different with Apple is that if customers want to do things or in other parts, they do not need to rely on Apple, right? They can go to Samsung, they can go to Xiaomi. There are a lot of other smartphone vendors. There are vendors across all the other products. Within music, there's Spotify. And so, sure, Apple has advantages and they do a good job integrating things, but there is decidedly competition. I would add, though, in these other businesses as well, Amazon, Facebook, Google, competition remains fierce. I mean, we all remember history with America Online or some other platforms that were viewed as unbeatable at the time, and of course things change. So I go back to this point around innovation, because if these companies are not able to do that effectively over the next few years, they're going to have trouble. They're going to have trouble creating value for their users and, frankly, ultimately their shareholders as well.
Meantime, I want to get your quick thoughts on Microsoft, which is not one of the four companies that has been called to testify, but has been looped into this group of big tech companies that has continued to be quite acquisitive. We did see Microsoft's cloud sales slow down. You know, why do you think, obviously, Microsoft faced antitrust scrutiny in the 80s? Why do you think Microsoft has avoided this latest conversation?
Well, their operating system and what they did a couple of decades ago was really front and center in terms of how people were able to access information. That was really the key platform. But of course, things have broadened out tremendously. If you look at what Microsoft has done, they've moved into other areas. They've had a lot of success with their cloud business, the Azure platform, and so relative to Google and Facebook, they do have some advertising in their Bing search engine, but it's not to the same scale. And when you speak to customers of Microsoft today or in recent years relative to decades past, they're viewed a little bit differently. They're really viewed as enablers of a lot of what these companies are doing to transition their businesses to really capitalize on the opportunities that are presented in the digital world. So there are some differences. I think Microsoft has executed well. And relative to the paradigm from a couple of decades ago, there are many big players globally. Of course, as we all know, it's not just about the United States. It's about the global markets, Asia, Europe, et cetera. And so that this broadening out, I think, changes those competitive dynamics with respect to Microsoft.
All right. Dan Flax, Neuberger Berman. Dan, always good to have you here on the show. Thanks so much for doing some looking ahead for us. Coming up, we're going to dig into what exactly this hearing will look like, how it will play out. On Wednesday, all CEOs will be appearing virtually. That's next. This is Bloomberg. Dinakar Singh, a former top trader at Goldman Sachs, is rediscovering what it takes to succeed as a long-short investor as he leads his investment firm Axon Capital through the COVID-19 crisis. He's long Facebook and Google, not, say, Amazon or Microsoft, and spoke exclusively with our Eric Schatzker on Bloomberg Front Row.
We've owned them before, and the reasons still hold. So are they better or worse positioned? Look, I think any company that's going to have advertising exposure will be hurt if the economy doesn't do well. The question is how much. For us, what we like about those two were that as an investor who cares about spreadsheets rather than just sound bites, it actually is something that we can actually go and gravitate towards and have conviction, right? I mean, in a volatile environment, most of all, I said, know yourself and make sure you're doing things where you can hold your conviction and you're not going to get scared at the worst moment. So Amazon, is it a great company? Absolutely. Would you like to be Jeff Bezos? Sure. The problem is I don't have a clue what multiple to put. I mean, is it 100 times earnings? Is it 200? I mean, Zoom is a great company. Is it a great company at 265 earnings or 165 times earnings or 300 times earnings? I don't know. And I'm not sure anyone knows. I mean, it's just a theme investment, right? With Google and Facebook, you don't have to go and be a new paradigm guy. Traditional multiples on traditional metrics work just fine. And frankly, for both those two specifically, on top of it, you get something extra for free, right? In the case of Facebook, as an example, WhatsApp is arguably becoming one of the most important franchises in the entire world. Less so in the US, but in Europe and especially in Asia, everyone uses WhatsApp. They don't make a penny from it. And if anything, it's actually costing them money because it's an expense center, not a revenue center. So Facebook is really Instagram, it's Facebook, and it's WhatsApp. Facebook is itself a mature business. That's nothing particularly exciting, but you're not paying 40 times earnings for it either. Instagram is still a great business that's still growing. And WhatsApp is a completely untapped, incredible franchise. So for us, it's a decent multiple and you're getting stuff for free, right? And Google, frankly, the same way. Google is a incredible franchise. Yeah, it'll have some cyclicality to it, but they've also spent a fortune on things that simply haven't shown up yet in value, but someday will, right? Whether it's automated driving or all the other 100 things that put money in. And so, look, I think here, if there's any one company where I have high confidence that they are going to have their fingers in all the important pies down the road, to me, Google is as good an example as anyone. And so to us, it was a combination of great franchises, great price for the investment, right? Because ultimately, agreeing with someone that something is a great company, but having the price be crazy doesn't really get you very far, right? You need some bargain. And so for us, these are the only two of the big stocks that we really felt fit that. Microsoft, I wouldn't really have a quarrel with. With things like Amazon, you start getting into territory where I think it's a theme. And I think it's a great theme, but I don't know how to go and value it.
Dinakar Singh there of Axon Capital. But what are the regulatory risks facing Facebook, Google, Apple, and Amazon? Joining us now to discuss, we've got Scott Galloway, professor of marketing at the NYU Stern School of Business, who's also written books on the topic of big tech. Scott, good to have you back here on the show. It is no secret that when lawmakers have questioned big tech CEOs in the past, they haven't necessarily had all the information about how these businesses work. So you wrote up some potential questions for the lawmakers to ask these CEOs, complete with diagrams. Why take this approach?
Well, I think that it's not, I think we all, the majority of the themes around anti-competitive behavior, a lack of oversight, that these organizations have potentially been weaponized to decrease the sanctity of our elections. I think the themes aren't that mysterious. What typically people don't understand is just the scale of these companies. So I thought it would just be, obviously, as you referenced generously, I think a lot about this, have done a lot of work around it and wanted to be helpful, if you will, and just put together on my blog, profgalloway.com, just some thoughts and some of the accompanying charts and infographics just to get a sense or help people get a sense of the proportion and the scale.
Now, you say that you expect Mark Zuckerberg to get the most ire. How are you expecting the hearing, which will be all virtual, to play out?
Well, as is often the case, the war is over before it started. I think big tech has already won. I think that the hearing should have been delayed until they could do it in person. I think it's unlikely. One of the real benefits of a hearing like this, Emily, is there's an opportunity for an unscripted moment that reveals something about the individual or the company itself. I think that's less likely with this type of hearing. Them negotiating that they're going to testify together, there's sort of safety in numbers, and it'll be more difficult to go really deep on any one issue. And the antitrust issues facing Facebook and Amazon are much different than the antitrust issues facing, for example, Apple. So I think the big tech, as they often do with their army of lobbyists, has sort of, the battle has been won before they show up. I think a Zoom-based testimony is much less forgiving to the witnesses, and also the notion that they're all showing up together. But effectively, you're going to have Zuckerberg will get the majority of the ire, Bezos will get the majority of the praise and the idolatry, and I think Cook and Sundar Pichai are just going to stay out of the way.
Interesting. How would you put these companies in the order from most to least egregious on anti-competitiveness issues?
I think the answer is yes. Look, it depends. I would say probably the most, by traditional antitrust, it's probably Google, just because they kind of own the auction house and they're also bidding and selling. In terms of ease of breakup, if Instagram and WhatsApp can be acquired in the last 10 years, you'd think it's probably easy to divest. In terms of economic power and danger to the economy, when you have one company that's adding the value of all of specialty retail, adding the value of the largest company in the world, Walmart, in a 6-week period, you could argue that it's Amazon. In terms of regulation, when 2/3 of our app economy is controlled by the App Store and they're suppressing better products, whether it's Spotify, obviously can't get a leg up, or is an inferior product to Apple Music, or a superior product to Apple Music, but Apple Music is growing faster because they own the rails of the App Store. I think each of them raised their hand when you ask who is abusing their monopoly power. Anyways, in order, I think probably Apple is the least ripe for antitrust, because the core asset there is the brand, and elegant antitrust, like a good virus, keeps the host alive. And what you'd want to do is actually unlock shareholder value. So I would argue Apple's probably the distant fourth, but I think the other three, there's a very strong argument to break them up.
Now, I want to dissect some of what you said there. You mentioned spinning out WhatsApp and Instagram. Is that something that you believe should happen?
Yeah, I think at this point, Facebook has very little motivation to comply, to put in place the requisite safeguards. I think that if Instagram and Facebook were separate companies and WhatsApp was a separate company, I think that what you have right now is a platform where 3.5 billion people are on it every month, a population greater than the Southern Hemisphere plus India. And we have one individual who can't be removed from office, who will likely be with us another 5 decades, who get to decide the algorithms which are not transparent to us in terms of what content and which directions they're nudged. And typically throughout power, one of the truisms of business and society is that power corrupts. And so when you have an individual with this much power who hasn't shown a great deal of regard for the Commonwealth, I think that much aggregation of power is very unhealthy. And what you have with these companies is, I believe if you broke them up into 3 separate companies, and 3 to 5 years down the road, I think these companies in aggregate would be worth more than they are now. Your previous guest talked about there's still a lot of value to be unlocked from Facebook. And I think they would have incentives to compete with each other and perhaps put in place the requisite safeguards such that teens don't get depressed or that our elections aren't weaponized. So I think that Facebook is obviously pretty ripe to be broken up. I think shareholders win. Typically in a breakup, every stakeholder wins. Shareholders win, the economy wins, the tax base wins, innovation wins. The only loser is the CEO of the company, who finds that they are now just CEO of one of the 7 realms and not the CEO of all of Westeros. And unfortunately, that's the individual that gets to decide this. So I think it's very ripe to be broken up.
So moving on, our Game of Thrones, you mentioned Jeff Bezos. You thought he would be getting most of the praise. He is, the richest person in the world. He has never appeared before Congress, to my knowledge. In recent years, we've seen all 3 of the other CEOs testify on Capitol Hill. How are you expecting Bezos to handle this?
I think he's very good. I think he's very smart. I think he's very charming, and I think he's very likable. I would expect him to laugh a lot. He's got a very likable laugh. I would expect him to talk about how Amazon is hiring more people than probably any company in a 3-month period in history, and use the number 4% or 5%. They're only 4 or 5% of retail. So how could we be any threat to anybody? But more than anything, what he's bringing here is, I think Jeff Bezos has more soft power than any entity in history, with the exception of China right now. When you own the Washington Post and you're testifying in front of a group of people who cling to power like nothing else, and the Washington Post has a lot of influence over whether they get reelected or not, when you have the ultimate man cave in Kalorama and they all want invites to these parties, when you have 100 full-time lobbyists, there are more full-time lobbyists from Amazon right now than there are sitting US senators living in DC. So Jeff Bezos has tremendous soft power, and I would argue, and he's likable, I would argue that you're going to see just this amount of fire and fawn for Zuckerberg and Bezos respectively. But I would expect that my prediction is that Jeff Bezos is going to put on a master class around delay and obfuscation and go on the offensive. And basically it's going to be a master class on how to avoid regulation and antitrust. And there'll be no shortage of individuals who are willing to give him constant praise and embrace in this sycophanted, gross idolatry of innovators.
And lastly, we have Google and Sundar Pichai. Obviously, Google dominates the digital ad industry along with Facebook. Sometimes it's a little less sexy to talk about, but what are the main challenges that you believe Google presents?
Well, Google is our God. If you talk about the most important process in the history of mankind, it's when our intentions become our actions. And the primary arbiter or source of information that determines how our intentions translate to actions is one firm that gets to decide what content you see when you articulate your intentions 93% of the time. And if you type in how to overthrow my government, you get, is the first return a voter registration form or instructions on how to build a dirty bomb. And one organization controls 93% of those decisions. So I can't think of another industry where as large as this industry, $150 billion, where one company has 93% share. So we have broken up companies and decided it's unhealthy for our economy, unhealthy to have this level of influence globally when companies get to a much lower bar. Sundar is very likable. I think Google benefits from the fact that it's not an easy business to understand. So I would expect that Sundar and Tim will largely just stay away from the train wreck and the praise that is going to be the Zuck and Bezos show here.
Interesting. All right. Well, I'll be watching to see how many of your predictions hold true. Scott Galloway of NYU Stern School of Business. You can check out his post at profgalloway.com. Scott, thank you as always for joining us, and thank you all for tuning into this edition of Bloomberg Technology. I'm Emily Chang. Bloomberg Daybreak Australia is next. This is Bloomberg.